Wow, we live in such interesting times. Man, the news is just always giving us something to talk about. Now, we got inflation out today. Now, if you follow my work for the last year and a half, 2 years, or 3 years, I've been sharing the fact that I thought prices in the real estate industry nationwide would be going up. Now, we talked about the corrections that we saw on my work. Now, I interviewed Charles Nenner for many years. I followed his work, and it's helped me develop my timing model based on a real estate cycle. And on my work, it shows incredibly higher prices. Well, there's lots of scenarios as to how we could get to that, but I often don't know why it's going to happen. I just see that it's on my chart, and it shows me what is going to happen. Now, again, there is no guarantee that this is going to continue working, but my work shows that prices are going to go considerably higher. And today we got some information on inflation. So could this be one of the reasons that prices are going to go high? I don't know. Let's take a look at my chart. It's right here. So let's look at that. Now, I've been using this for many, many years. I think we're here in the accumulation phase. This is where really fortunes are made. This is where we are right now. If you can buy properties, I think prices are going to go considerably higher. This is literally called the accumulation phase, and this is called the explosive phase. Now, as you can see, it looks like prices are going to go considerably higher. Now, my work absolutely called these 2 corrections to the month. So this was March of 2018. I knew it was going to be a fairly significant correction. I called it for recovering in the fourth quarter of 2019. So it was down for quite a long time, maybe almost a year. So it was a pretty long correction. We had a very short correction. I had no idea we were going to have this COVID recession, but it was on my work that we would have a double correction. And then we were off and prices would go considerably higher, which they have for the last year and a half. So far, the timing model has worked very, very well. That's no guarantee that it's going to continue working very well, but so far, so good. But this is what it shows me, is that we're going to go very, very high. And we may very well go right into new bubble territory, a lot higher than people think that we're going to go. This would be very, very interesting if you own properties. It gives you some forewarning as to how you can maintain your portfolio. Now, if you think we're going to go into bubble territory and the cycle is going to complete, now I've been through 4 cycles, so we complete them and then we move on to the next cycle. Now we have strategies, so if prices continue going up, you want to accumulate multiple properties. And then as we go into the explosive phase, you may want to liquidate a few of these and pay down mortgages or pay off mortgages. So we go into the completion phase, you go into it with free and clear properties, or you've taken some of your gains off the table. So this is just part of a full cycle investing. However, let's just take a look at some of the reasons for why right now. Now, this is not necessarily telling you this is absolutely going to happen, but here's a possibility. So let's look at the next chart. This is what Zero Hedge put out this morning. This is the CPI consumer month over month for May, 5%. We haven't seen that since 2008. Look at this, and 2008 was just a little bit higher at 5.5, maybe 5 3/4, and here we are at 5. And look at this spike. We have talked about this spike for a very long time. This spike is continuing on virtually all of the asset classes that we see. And here it is spiking in inflation as well. And it's at 5%. Now we've had very, very, very benign inflation, under 2% for 2 decades. And here we are, inflation is coming up and it's coming in hot. Now we've talked about what the ramifications for this are, and how, if you're my age, you really need to protect your assets. You need to protect your purchasing power, because in inflation, things get to be more expensive. and the revenues that we receive on some of our fixed income. Now, it's known for fixed income for a reason. It's fixed income. And fixed income doesn't necessarily keep up with inflation, and your purchasing power erodes. Now, it erodes slowly. So over the last 20 years, it's been very benign, but still you've lost 50% in 20 years. Now at 5%, double what we've been looking at. This is pretty significant inflation coming in. So let's go to the next screen and take a look at what the next one is. Now this is commodities. So this is the CPI on commodities. And look at this. This is less food and energy, but it's at 6.5%. Now we've been looking at sub 2. This is triple what we've been looking at. And we have to go all the way back here to 1980s to start seeing this type of inflation. Look at this. And this could be just getting going. Now, is it transient? Well, you hear a lot of people saying they think it's transient. It doesn't look transient to me. It looks like we're entering into a full-blown inflation cycle, in which case it's going to be with us for a while, have to run its course. It's not so bad if you're protected for it. And of course, residential housing or rental, probably the best inflation hedge you could possibly get. We'd like to see you do this. We've been talking about this. It's on our charts. And this could very well be one of the reasons that we see prices go considerably higher. Maybe, so let's just take a look at the next chart. Used cars and trucks. Holy cow. Holy cow. Look at this spike. Does this look like we've seen this before? And again, prices of cars and trucks are going up and going up significantly. If you're looking for like a Corvette or kind of a cool car for yourself, you're going to be shocked when you see how much these prices have gone up. So Zero Hedge put out these slides this morning, and thank you for letting me use them. But they just illustrate what we have on our charts. So there's no guarantee that this is going to continue. But if it does, you really need to protect yourself. And if it doesn't, real estate is still a very, very compelling investment. Now, as I've said before, talk to your financial advisor, see if this works for you. I'm not telling you to put all of your money into real estate, but probably a portion of it. You probably should have some exposure into the real estate asset class. If inflation gets going, it's going to protect you a little bit. And of course, it gives you great income anyway. You're going to get more money from an income than almost any other income stream you can possibly get. So this is very, very good stuff for you. Talk to your financial advisor. We're here in Phoenix. We do this all the time. We're more than happy to help you in any way we can. Now, this is where I get to ask you to give me a thumbs up if you like my video. That really helps with our marketing. And if you would subscribe to my channel, that really gives us a boost in marketing too. These are a couple of books that I've written. I'm a very proud author. So if you want to pick up my books, you can get The Money Machine virtually anywhere in the world. And The Real Estate Investing for Beginners was just recently published. Amazon is really where I've got it at the moment. And you can get all that. Or you can call us and we'd be more than happy to send it out to you. You can go to my website at michaeldouville.com. In the meantime, if I can help you in any way, we are very, very good at what we do. Our people here understand investments. They understand baby boomers. They understand putting income and retirement into your portfolios. You're welcome to reach me at michael@michaeldouville.com. My very best to you.